so number 61. Ah, yes. You're not the only one that's asked this question. I got a couple students that asked this question. Okay, you have to read the instructions really carefully. Up here in the italics, it tells you to calculate the tax withholdings, you have to calculate the rounded tax for each pay period and then multiply it by the number of pays in the lump sum payment. So he is getting paid this 21,000, well, I just gave you part of the answer there. The lump sum payment is for 7 pays, right? So we've got 3010 per pay times 7 pays. And we get, what is it, 21,070 for the lump sum payment. Now, it would make sense to then just take this amount and multiply it by the 0.015, whoops, 145, geez, and use that amount, right? Let me get the calculator up here. That's what my first instinct would be.
Well, there's another one in like the later and before that you do the same thing for.
Mm-hmm.
And if you take the lump sum times 0.0145, it says the homework says that you're right.
Mm-hmm.
And then everyone after Matthew, if you take the lump sum times that number, it's right as well.
So there is a good chance that those two numbers would be the same anyway.
Got it.
And that might be what's happening with those other problems. In this case, though, those numbers are not the same.
Right.
Right? So this what you would get 305. Oh, that's even worse. Sorry. Let's use blue. You would get 305. What do we have here? 52. Except those aren't the instructions. So what you have to do is figure out the tax on this amount and then round it and then multiply by 7. So you'll see we get a different result here. So 3010 times 0.0145 . 4365. We're going to round that. Then we're going to multiply it by 7. $305.55. This is how they want you to do it. Yeah. And like I said, it could be, my guess is those other problems happen to get to the same number.
Okay.
Mhm.
I've already turned in the homework, so like I wasn't.
Yeah.
It was just more of like, can you explain why everything else matched up perfectly? It was just that one.
Right. Yeah.
Could've made it easy.
Yeah, and like I said, yeah, several students had asked about that one.
And then the second one that I had was number 71, the extra mile.
Okay, and 71. Any other questions on this one before I move on? Okay. 71. All right. All right. So, was it any of these,
So
or?
it was one of those, I can't remember, but basically the number that they gave me, I think it was like, the second one, my number was different.
Your number here was different?
Yes.
Okay.
So it said, this person earns this much weekly, and then it said monthly earnings, which screwed me up. Totally it gives you, so it says the more than, but less than, or at least, and then it's the same number on the next line. I think it's the wage bracket,
Okay,
okay? So it's like, remember our wage bracket? So it says, so 155 to 165, and then it goes to 165, right?
yes, so you use the
So-
second one.
Yep, so for that
They
one,
did the line before.
They use the line before.
they used the line before, and every
Okay.
other problem in the homework makes us use the next line.
So this one they screwed up.
So that was just an internal screw up.
Okay, yeah, that's a mistake.
So we're supposed to use the next line.
You are supposed to use,
Okay.
because if you read it carefully, it says, what does it say at the very top? It says
At least, but less than.
at least, but less than,
You
so,
don't come up with negative numbers when you actually do the calculations for it.
what's that?
You'd end up with negative numbers when you did the calculations from it, using the numbers they want you to use.
I guess I don't understand that.
When you had to subtract the actual number from the bracket they wanted you to use,
Okay,
your initial calculation was in the negatives.
oh, really?
Yeah.
Okay. So, you said it was on this second one here, and you're right, weekly, it says weekly up here, and then it says monthly down here,
And that's what
so
happened with
which,
when you use the actual.
I
When you
used
go
the
to
weekly
percentage.
one. And the weekly one was correct,
okay,
but it was the line before instead of the correct line.
okay, so like this one, 1409, let's see what it does. Where is my link to the, did they not give you a link to the wage bracket method? Oof.
I got the 1391 weekly correct, but not the 1640. So
Not the 16. So I have different numbers here. You got, which one did you get correct? The top one or the bottom one?
me,
Mm-hmm.
the bottom one correct.
You got the bottom one, but it was the top one that you had a problem with.
Yeah.
Okay. What am I doing here? So they're asking you to use the wage bracket method. Okay, so if we use, let's do the second one first, Melick. 1409 weekly, head of household.
It'd be 121.
Oops. Where's the check my work? There it is. Hello. It won't even do it to check my work.
It worked for me just now.
It worked for you?
Yep.
Are you, did you have the same 1409?
Yep.
Okay, and so the one, okay, there we go. So that one's correct. So this one, married filing separately, semi-monthly. Semi-monthly. Married filing separately, whoops. And they want you to assume standard withholding or checkbox withholding. Does it say, doesn't it say somewhere at the beginning?
I'm pulling mine up again just to make sure, but I'm pretty sure that mine said 1415 instead of 1409.
Okay,
And so I put in 123, which is the next line. They were
do we assume? Maybe it's here. Nope, didn't tell me. Alright, well, we'll try both. 1676. So it's either 129 or 221. Yeah. Okay, so that one's correct. And so it looked like others kind of experienced this as well, that it did the one below.
For the semi-monthly, I had 1640, so not 1676.
Okay,
And I tried 127, but that didn't work.
so how much was your amount there? 16,
1640.
all right, so it should be, yeah, 127. Head of household?
No, filing separately.
Okay, then that one's separate, then this would be probably the $60, no, that's jointly, sorry. Oh, I'm sorry, you're right, single or married filing separately, so 1640, 127?
No, that's not correct.
What about 217,
Nope.
125?
Yep.
Okay, that's not right. I mean, it's right on there, but it's not right. So yes, it should be the second one.
Okay. I just wanted to make sure I wasn't doing something wrong.
Nope.
And like, I don't know if it was like a typo and they meant to put 1414.
Right, because-
Would make that right?
Yeah, because here, it says, but less than. It has to be less than whatever amount is in this column. So 1640 is not less than 1640.
Right, mine's 1415.
Right.
That one. And it's,
14.
so weekly head of household.
Yours is 1415,
Yeah.
so it doesn't even fall in the line.
I think you're in the wrong bracket.
Oh,
You're semi-monthly. Should be
Okay.
weekly.
so 14,
Look.
okay, I see.
Yeah?
So at least 1415. 1415 is at least 1415. So head of household, you said?
Yeah, so it would have been 123.
123, but it said it was wrong?
Yes, it said it's 121.
Yeah, that's not right.
So I just wanted to make sure that I was doing it right.
Unless you were doing it right. I'm wondering if, because sometimes they will update these during the year. This is for 2021. No, it was done December 8th, 2020. I don't have an answer for you. Other than they screwed up.
I just wanted to make sure, like I said, every other question in the homework was like, I was right on the money, and then that was just that one question, it was like, no, and I was like,
Yeah.
what am I doing wrong?
Okay. Well, it should be the next line.
Okay.
Other questions?
On 71,
Mhm.
the individual has modified AGA of less than blank. In the case of a married employee, combined AGI must be less than blank.
Okay, so are we right here? No.
It's in the
Which-
overview.
Overview. Okay. Let's get this out of here. Oh. I'm sorry, this is so. You guys are you're probably used to it, but this drives me nuts having to scroll all over the place.
You could try, see that box with the 3 lines? you out there, try clicking that.
Well, looky there. All right, so
It's at the bottom of it, right there. Number 2.
okay, individual has a modified AGI of blank. In the case of married employees, combined AGI must be, okay, under certain, oh, okay, so this is about the IRAs, right? So this is either gonna be more than or less than. Married employee, and this is for IRAs. There are limits to, so if you are covered by a retirement plan at work, your adjusted gross income on your income tax return cannot exceed a certain amount in order for any contributions to IRAs to be deductible. You can still make a contribution, it's just not deductible. But those dollar limits are, it depends upon filing status. So for single individuals, it's a lower dollar amount. So once your adjusted gross income goes above that particular dollar amount, then you can no longer deduct any amounts that you contributed to an IRA. So that's what this is. So if an individual has modified AGI, now it's going to be, let's see. Okay, so it's going to be less than a certain amount, because if it's more than, it's not going to be deductible. And then it asks you to name what that amount is. Do they go over that in here? In the book, okay. All right, so I think 60 or 66,000?
Yes.
66,000. So if you're a single individual and your adjusted gross income is more than 66,000, and you make a contribution to an IRA, and you're covered by another retirement account through your employer, then this $66 or the $6,000 maximum amount starts to get reduced until it goes down to 0. So there's this threshold. It's actually a phase out range. Married employees, though, it has to be less than, and is it twice that amount?
105.
Marriage penalty. Less than 105,000. Okay, so let me find where that is in the book. That's kind of verging into income tax stuff. And it's really not something, this is really not something that employers would deal with, payroll personnel would deal with. This is more of an individual, you know, the individual taxpayer has to have this, has to know this information. So it's a little funny that they put it in here, but okay, whatever. You happen to know what page that's on? Where they talk about it? Is it in the, it's not in the supplement?
It's where it talks about IRAs. My author has numbers. Under tax deferred retirement account.
Is it toward the beginning of the chapter?
Yeah.
Oh, okay. Oh, I see. Okay. There you go. Okay, so there is a whole section here, page 4-9, about IRAs, about the limits, and the specifics. So the individual has modified adjusted gross income less than 66,000 in the case of a married employee, the combined adjusted gross income must be less than 105,000. So those words are coming right out of the textbook. There. Okay. Does that help you out? And did you have other questions, other problems, or?
Number 62.
62. Oh, the gross up. Yes. Okay, so with the gross up, you have to kind of check your work on it as the last step. And by that, I mean once you have calculated the gross up amount, then you have to go through and calculate what the taxes would be. Each of those individual taxes would be. So we've got bonus of $250. Company wants each employee's check to be $250. Supplemental tax percentage use, so we're going to use that 22% tax rate. Do we have any? Okay, state income tax of 3.01%. Now this one, got other students ask me this as well about this problem. Also, this particular problem, I don't exactly know why, but they are not excluding, oh no, I'm sorry, this is a different problem I'm thinking about. There's a problem that involves simple plans, where the simple plan is, the amount of the contribution to the simple plan is excluded from federal taxation, but it's not excluded from state taxation. That's weird. That's not usually how it works. Usually it's both. So it's going to be pre-tax for both state and federal. But the problem itself, and it's in the instructions, but it's kind of vague. It talks about total wages. But anyway, sorry. Let me get back to this one. I confused that problem with this one. So let's gross this up. So we've got to take our 1 minus 0.22 minus 0.062 minus 0.0145 minus 0.0301. All right, so let's see what that number is. So 0.6734 is what we do. Now, what's the next step?
Do we divide 250 by 0.6734?
$371.25. So this is now our gross. Okay. But in order to make sure this is the correct number, we've got to then go through and calculate the tax on this. So first thing we'll do is the federal. So it's 22%. So $371.25. 81.68, and then we will take we'll combine these together, just take the full FICA tax, so we don't actually, no, we won't. We'll do them separately because we may have an issue with rounding here. So OASDI, HI, and state income tax. So we've got 371.25 times 0.062, 2302. Medicare tax. We've got 371. So 538. And state income tax, 371.25 times 0.0301. 11, 1118 probably. Now we've got to subtract all of those. And if we don't arrive at $250 exactly, then we're gonna have to make an adjustment to the gross pay so that it does equal $250. So 371.25 minus 249.99. Okay, so what we're gonna have to do is change this to a 6 so that it comes out to 250. So you've got to do this extra step in order to make sure that this is the correct amount. So 371.26. Nope.
That's weird. I got
125.
Yeah.
Is it say 5?
Yeah.
It's because the SIT is 17.
Okay, see, I rounded that. So, like the 371.25 times 0.0301. So the 6 would make the 4 a 5. The 5 would make the 7 an 8. Am I correct? All right. So they say it's 17. Maybe they only want you to go to 3 decimal places. Does it say that in there? Probably somewhere it says only go to 3 decimal places. Okay, fine. So 250. But you still need to do this final calculation in order to make sure that this number is correct. Still looks like 6. All right.
250 for me was not correct for B.
For B?
Yeah.
Okay, so what would the net amount of each bonus check be if the company did not gross up the bonus? Okay, so if they did not gross up the bonus, that means we're starting with $250, right? And then we've got to subtract all of the taxes. So 250. So federal income tax on 250. 55. YSDI. 1550. $363. And 753. $168.34.
Yep, that's what I got.
Okay. That make sense?
Yeah.
Okay. Other questions? No? Okay. Let's then, sorry, go ahead.
Can you go over how to do C and D for
43. C and D, okay. This is the one. where, let's see, is this the simple? Yeah, this is the one. Okay, so, George, age 48, employed by Klein Company, paid an annual salary of $42,640. He's gonna join the company's simple retirement account and has a few questions. Yeah. Maximum amount he can contribute to this retirement fund. What's the maximum amount? Let's do these first.
13,500.
Right, 13,500. Right on. What would be the company's contribution?
1,279.20.
And 20 cents? Whoops. 1,000.
279.
20 cents. How did you get that? Yeah. So. Oops, sorry. So 42. There. And take his salary times the 3%. Okay, so use these values in subsequent computations. Round your final answer to 2 decimal places. What would be his weekly take-home pay if he contributes the maximum allowed retirement contribution? So he is married filing jointly, wage bracket method, 2.3% state income tax on total wages. All right, so we need to figure out how much he is making per pay, right? Did they do the calculation up here? No. So gross amount per pay, and there are a couple of ways you could do this. You could start with the 40, I think, you could start with the 42,640, subtract 13,500, left with 29,140, and he's paid on a, how frequently is he paid? Weekly. Then we divide that by 52 weeks. So his taxable pay after so 560.38. His taxable pay after the simple contribution, right? We have to do a couple of different calculations here because we've got to figure out how much the tax is, but then we've got to apply the tax to the calculation for what the net pay is, right? Okay, so, and again, I guess I'll assume that's 38 cents instead of 39. All right. So, we need to also figure out, so what his gross pay is before. So 42,640 divided by 52 weeks, so $820 a week. But this is subject to federal income tax. See, we've reduced the 820 by the amount of the contribution, the simple contribution. So now we can calculate how much the federal income tax is using these methods, and we're going to use the 560.38. Married filing jointly. Ah,
Yeah,
give me a break.
I hate that.
Oi. Can we? Oh, let's use this here. Wage bracket. Weekly, married filing jointly. 560.38. Is it $8? Okay. All right. So we've got federal income tax of $8. And I know this is kind of, I'm not putting this in a very organized, it's not very organized, sorry. So, federal income tax, $8, but our Social Security and Medicare tax is gonna be calculated based on this. Because it is not pre-tax, retirement funds are not pre-tax for Social Security and Medicare tax purposes. So, take the 820 times 0.062, 5084. And Medicare, 820, 1189. Okay, so here's where it gets, let me see the instructions here. Okay, this is where it says. Normally, the amount subject to state income tax would be the same as the amount subject to federal income tax. This problem, though, says 2.3% state income tax on total wages. And it's a little tricky. They've kind of, I don't like that wording. I think it's not real clear on what they mean. But they're not including the simple contribution as a pre-tax contribution for state income tax purposes. So we've got to calculate the state income tax withholding based on the full amount, okay? I don't know, maybe other states do it like that. 2.3, 1886. All right, so now we've got all this information, we can figure out what his net pay is gonna be, his take-home pay. So we start with the 820, right? I'll put this over here. Well, we start with the 820, and then we're going to subtract the simple contribution, which is, how much is it? Divided by 52 pays, so $259.62. And then we're going to subtract, so this is our subtotal. And then from that, we're gonna subtract all these amounts. Okay, so we've got 8, 50, 84, 1189, 1886. $470.79 is going to be his net pay. Second part of that problem asks, what would be his weekly take-home pay without the retirement contribution deduction? Okay, so if we don't have the simple contribution, then that's not going to reduce our federal income taxes, right? Now we're going to have to base our federal income tax withholding on the full 820. So we don't have a subtotal now, and this amount's going to change. This amount's not going to change because we already based it on the 820. Neither is this amount and neither is this amount. It's only the federal income tax that's going to change. So we'll look at the table. And we're going to look at $820. Okay, so that's between $815 and $825. Married filing jointly, right? So now his withholding is $34. Now his taxes went up but his actual take-home pay is gonna go up as well because they're not withholding that simple contribution. So 820 minus 34 minus 704.41. That make sense? Is that helpful? Okay. Other questions? Any other? Yeah, go ahead.
Number 67.
67? Okay. So Herman Swain, waiter at the Dixie Hotel. He earned $360 for the 40 hours he worked. In addition, he reports his tips for February to his employer of $700. The employer withholds the appropriate taxes for the tips from his first pay in March. Calculate his take-home pay, assuming the employer withheld federal income tax. Oh, this is in the 2019. 2 allowances? Does it say it's for the 2019 method? Oh, yeah. So, manual payroll systems with forms W4 2019 and earlier. All right. So, our 4 factors here, let's write them down so that we don't have to keep referring to that. So again, there's kind of 2 parts to this. We've got to calculate the tax on the total amount of pay, but then we've got to calculate the net pay. But remember, he's already received the tips. So those tips are not going to be included in his net pay that he receives from the employer. He's already got, it's like he's been prepaid for that amount. So our 4 factors, remember we've got taxable pay, we've got number of allowances, and this is the 2019 and earlier. So taxable pay, number of allowances, frequency, and married or single, right? So in this case, our taxable pay is going to be the amount that he's receiving from his employer, the 360, plus the 700 that he's already received, right? So 1,060, this is taxable pay. Number of allowances, they said 2. Weekly pay. All right, so he is paid weekly. And he is married. There's our 4 factors that we need. All right, so with that information, we can figure out what his net pay from the employer is gonna be. Okay, so let's figure out, well, we could do the easy part here, the Social Security. Right? Let's get that part out of the way. So our Social Security calculation and Medicare, again, we're going to apply the tax rate for Social Security to that full amount. So 1060, 6572, and then the Medicare, 1537. Okay. And the flat, we could do the state income tax too. 1060 times 0.02, 2120. Okay, so there are those taxes. Now we got to calculate what the taxes are, the federal income taxes are. So we're gonna go use the wage bracket method, so let's go back here. Alright. I need to take it earlier. Okay, so he is paid weekly, and he's married, so we're on the correct table. 2 allowances, so it's gonna be in this column here. Now we've gotta find the 1060. Okay, so it's gonna be this one here with 2 allowances, $72. So, we have to take the amount that the employer is paying him, the $360, and then subtract all of those amounts of withholding. Because remember, he's already received the $700, so $360, and then we'll subtract all these amounts. $185.71. Okay. So where a lot of students get tripped up is they'll subtract all those amounts from the 1,060, forgetting that he's already received the $700. Other questions? All right. Nothing else? Going once, going twice? Sorry about some of those glitches there in the homework problems. That's annoying. Unfortunately, this publisher also makes it really difficult to report problems. Like there's this, I mean, not that it matters to you guys, but there's like this link to report content error. And when you do that, you've got to like re-sign in, and then there's this whole big form that you have to fill out, and then you have to like copy and paste what the problem is and explain it and what page, you know. It's like, this is too much effort to, maybe that's by design. They don't want you to report it.